Hey, it's Lewis here and welcome back to the channel, and in today's video we're going to be analysing Intel stock. We'll be using TIKR terminal to go through the financials, and then I'll put the numbers into my DCF and we'll come to a fair value of their stock. Let's get straight into it. So who are Intel? So Intel is an American multinational corporation and technology company headquartered in Santa Clara, California, and it is the world's largest semiconductor chip manufacturer by revenue. It's the developer of the x86 series of microprocessors, the processors found in most PCs around the world. The company itself is absolutely massive, ranked number 45 in the 2020 Fortune 500 list. So yeah, they produce microchips, microprocessors, whatever you want to call them, in your laptops, PCs. You can see their Acer, Lenovo, HP, Dell. They did use of the MacBooks, but now Apple have their own chips. The company's been around since the 60s, and it was founded by the semiconductor pioneers, the inventor of Moore's Law, if you're interested in that kind of thing. The company itself is listed on the NASDAQ and it's a component of the S&P 500 index. Now let's have a look at sales for Intel, and we'll start with sales per business for 2021. So client computing makes up 51% of sales, data center 33%, and the rest of it is few other balances. The rest of it you can have a look at yourselves. It includes like Internet of Things, whatever it is, from programmable solutions, Mobileye. Sales per region. So China makes up 27%, other regions 20%, Singapore 18%, the US 18%, and Taiwan 17%. Now let's take a look at Intel's financials via TIKR terminal, and we'll start with the income statement as always. 5 years worth of data. We can go back, back to 2012 on my package for TIKR, but we'll start with 5 years, make it easy. What we're doing? Oh, wrong one. Let's screw this up. There we go. That's cool. On with it. So income statement. So revenue from 2017 to 2021 has increased by about 17 billion, not too shabby. If I have a look at net income has also gone up by, it's nearly doubled in that 5 year period. So that's awesome. Shares outstanding have also decreased massively as well. Yeah, that's looking pretty decent actually. A lot of share buybacks for Intel. Very good for shareholders. The less shares there are in the company, the bigger piece of the pie we own. So we get an added benefit when they have share buybacks. A very efficient way of returning capital to shareholders. Balance sheet time and cash equivalents gone up. Love it. Long-term debt has increased by a little bit. What's that, about 7 bill? What's the current portion of long-term debt? Alright, okay, it's more like 11 billion, 12 billion we've increased the debt by. Want to know what they've used that debt for? Use it for growth, using it for good things. Returning earnings have gone up, means lots of profit in the business. We'd love to see that. And the book value of the business has been going up as well. Not like book value matters much anymore, but it's a good thing to see. Cash flow statement. So the figures that we like to look at are cash from operations minus capex, and that is free cash flow. So just having a quick look here. Yeah, it looks like free cash flow increased until about 2020, and in 2021 it's decreased due to these massive capex, which is expected. If anyone knows Intel over the next coming, say, 3, 4, 5 years, their free cash flow is going to be a lot lower because management are investing back into the business with big factories and trying to compete with AMD, Nvidia, and all the other different semiconductor companies. So you'll notice the free cash flow is massively down on previous years, to be expected, and we have to show that in our DCF later on. Right, onto the ratios. And the return on capital in this business is fantastic, way above the 15% I love to see. Gross profit, lots of profit going on here. So net income as well, very highly profitable, love it. Lots of free cash flow as well. So apart from 2021, of course. For the next few years, this will be lower. You've got to take note of that. And it's all part of your risk and reward for Intel. CCC isn't quite below 60, but we can deal with it. Total debt to capital is 28%, so it's not too much at all. There's not much debt in the business really compared to its size. If you'd like to use TIKR terminal, go into the description of this video, click my link, sign up, have fun analysing stocks. Fantastic platform, and I think it's well worth the I think it's about $15 per month, so it works about a tenner for us in the UK. Fantastic platform. Go over there and enjoy using it. Let me know what you think as well. If you are enjoying today's video, then why don't you book in a one-to-one coaching session with myself? In these sessions, you will learn how to analyse a company using fundamental analysis. As well as this, you will learn how to value a company using a DCF model. Value investing is the art of buying stocks which trade at a significant discount to intrinsic value. Value investors like myself achieve this by looking for companies on cheap valuation metrics, typically lower multiples of their profits, assets, and cash flow as well, for reasons which are not justified over the long term. Billionaire value investors such as Warren Buffett, Charlie Munger, and Joel Greenblatt have all used these timeless concepts to beat the market over the long term. No financial advice will be given on these calls, financial statement analysis and business valuation, education only. I will see you there. Now let's take a look at the genuine impact stats for Intel, and we can see the quality metrics to start with. It's ranking very high, profitability very high, financial strength medium, capital allocation poor, but overall it's looking decent for the quality ranking. Value wise, it's looking medium across the board, not much to say on that, it's just looking average on value point of view. Historical growth is shown as medium, very high and medium. So a bit of a mixed bag, but the dividends have been growing, so that's a good thing to see. Maybe the dividends have been growing, but the share count has been decreasing as well, which means double whammy. That's probably why it's very high, which makes sense. But yeah, some interesting insights there from Genuine Impact. Now let's take a look at the analysis checklist for Intel, and let's go over some quick stats. Market cap of 190 billion, current price of 46. If that looks wrong, let's reload it. 158 billion, share price of 39, recording, P ratio of 6, earnings yield of 16%. That's pretty high actually, isn't it? Return on capital, looking at 20%, 5-year average, awesome stuff, no complaints there. The next 2 years will be lower, but take it with a pinch of salt, look long term. Their free cash flow is going to be lower for the next 3 or 4 years, and then from there it should return to normal levels, and it should grow at a pretty decent rate. So I think it's exciting. We'll come to a DCF and I'll explain what I've done. Profit wise, lots of profitability in the business, love it. Free cash flow is there as well. A little bit different from the net profit, but something to bear in mind. Current ratio way above 1 at 2, so we can pay the short-term obligations. Cash conversion cycle isn't above the 60, but we can deal with that, I think. Total debt to capital is 28%, so there's not much debt in the business. Proven ability to grow over the past 5 years, yes, they've grown a fairly decent amount. Free cash flow down, expected. Management have told us about this. Long-term debt repayment, I think I said 11-12 bill earlier. Increased debt by 11 billion. Maybe not too much of a big deal if the total debt to capital is 28%, so we can deal with that. Not necessarily a bad thing because there's not much leverage in the business. Decreasing share count, love to see that. Rewarding us as shareholders, growing the dividend as well, which is awesome. Some good acquisitions here. It looks like they've sold us some divisions and they've generated some profits from there. Buy at a fair price, so currently I think Intel's looking cheap. Earnings basis 6 and free cash flow basis 16, they're the multiples. For DCF valuation, 10% return, I'm looking at a share price of $56 per share. From the current share price of $39, we're looking at a 44% uplift just to get to fair value. So yeah, it's looking very interesting. Now let's look at the DCF. This is a bit of a beast compared to some of my others. I usually only forecast 3 years of free cash flow, but I have a very small 2.5% growth rate into the future. Extremely conservative, but if they can hit the mark there, it makes sense for me to go ahead and look at the company. But right, let's have a look at what I've done. So for the next 3 years, the free cash flow, I've taken estimates from marketscreener.com. Analysts believe free cash flow is going to be lower for the next 3 years. Management has said this, they are reinvesting into their business. CapEx is going to be massive, about 20 billion year on year, because they're going to spend about, I think it's 80 billion in CapEx over the next 3 or 4 years. And once that's done, free cash flow will return to normal-ish levels, let's say 2020 levels. I've used 20 billion. Then from there, I've just used, what have I done, 5% from there going into the future to 2028. And all of this comes back to a share price of $56 per share. So the current share price is 39. If we have a look here, rounded up. Yeah, it's looking very interesting. With a dividend yield of 4%, as well. So they'll keep their dividend there. We'll keep getting our dividend yield of about 4%. Lovely stuff. What can I say? I think Intel's looking cheap. I think the market is overreacting about them. They are predicting Intel's going to go out of business. I don't think the numbers show that. I don't think these numbers, net income numbers, show that. Does not show a business which is dying. Look, revenues increasing over the past 5 years. We're in an industry as well where it's just increasing the demand. There's a semiconductor shortage at the minute. I think this is a no-brainer personally. Obviously do your own research, but Intel's looking very exciting for all those value investors out there. So there we have it. That was my full stock analysis for Intel. If you enjoyed today's video, then please subscribe to the channel. Thank you very much for watching. I will see you. Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos